Today, we are talking about digital currencies. What's going to be different for users? What does this all really mean when so many of our cards or other payment methods really just seem to live in our phones? We're going to explore whether digital currencies will help reduce dependence on big US tech for countries and economies around the world. And we're also going to be looking at a model out of Brazil that could be a model for future European digital currencies. Welcome to The Dip, the podcast about money, power, and consequences. I'm Kassandra, and we have some exciting guests for you today. But before we come to that, I just want to say we definitely read the comments over here. And whenever we do a story about any kind of digital currency, we get flooded from users like you who say, what about Pix? So some of the comments that we have here, we have no fees, different from Visa. The money arrives immediately to the seller. We hear from someone else who says, ask the Brazilians how to do it. Pix was a great success there. And then one last user saying Pix, which is super popular and took billions in revenues away from American companies. Because of that, we're now facing serious threats from Trump. So a lot to talk about there. I knew I had to ring up a colleague from DW Brazil, Iolanda, to tell me exactly why Pix is so great. Iolanda, thanks for joining us. You can see there the commenters were educating me a bit, but I'm hoping you can enlighten me even more. What exactly is Pix?
Hi, Cassandra. I'm very happy to be here. So, Pix is an instant payment system created and operated by the Brazilian Central Bank. It allows people to send and receive money 24 hours a day, 7 days a week, and at no cost for individuals. It works directly through banking apps or websites. And to receive payments, users register what is called a Pix key, which can be your mobile phone number or an email or your Brazilian ID or even a QR code. So it's much more easier than just like putting lengthy bank account details. You just type someone's Pix key and receive the money almost instantly.
Yeah. Here in Europe, you have to give an IBAN if you're trying to get paid or pay in the US. You might have to have a physical card or use something like Venmo or the like. But when you go home, because we were chatting earlier and you said you go back to Brazil a few times a year, how common is it? It's only like 5 years old, right?
Yeah, it's funny you ask me this because when I visit Brazil, I often feel like it's been around for much longer than just 5 years, because it's just everywhere. Everybody uses it. It's part of the everyday life. People use it to split a restaurant bill, to buy a coffee, to shop online, or to just transfer money to friends and family. And I think the success is just because it's so simple and convenient, And as it is in the banking apps, people didn't have to download a new platform or learn how to use a new system. It was just there. And I think that's because it's so successful. And actually, in 2024, it became the most used payment method in Brazil.
Whoa. And that's interesting what you point out there, that it's going to show up as a payment option right next to, PayPal or MasterCard or something if you're shopping online, it sounds like. And this seems to be in line with the thinking behind this platform, right? That it's going to keep evolving, keep improving. What other kind of changes have we seen in the short lifespan of this payment platform?
Yeah, definitely. Like the Brazil Central Bank has launched new features since it was created to update the system. And one important one is Pix installments, which can allow people to split a payment into several installments, which was done by Brazilians with credit cards. Another important feature is security measures, because when Pix was launched, there were crimes involving kidnappings, for example, and coercive transfers. So the central bank tried to create new features to avoid crimes and frauds. And for example, you can preset limits to transactions, especially nighttime transactions. And also, if you in a fraud, if you can prove it, you get your money back from the bank. So there are some features like this. Also, now it's being integrated into other platforms. For example, in Amazon in Brazil, there is the option to pay with Pix in the website. So it just shows us how it's an integrated system to other things in Brazil.
Iolanda, you've made a very compelling case about why this is so attractive, but elaborate a little bit more. Why do Brazilians use this method so often compared to, say, credit cards or Apple Pay or PayPal or something like that?
Pix had a great support of service providers and merchants because, for example, compared to credit card, it has lower fees than credit cards. And for service providers, it was good because they could receive the money instantly. And before they needed to wait, 2-3 days for a transaction, a traditional transaction bank. So that why it was very important to them to adopt Pix.
U.S. President Trump doesn't seem to be as big a fan as the average Brazilian. He cited Pix as part of the reason for this latest round of tariffs. There was a long list, but Pix was on the list. To be honest with you, to be really frank, why does Pix piss Trump off so much?
Well, according to the Trump administration, the argument is that a government-owned system like Pix can make it harder for foreign financial companies to compete in the Brazilian market. I think the real issue here is that Pix is successful and it changed the Brazilian payments market. And for many Brazilians, Pix is just a simple and fast way to transfer money. But despite accusations of unfair competition, the credit card use in Brazil actually increased between 2020 and 2025. Yeah, and one could also argue that Pix has increased the competition and reduced costs for merchants and consumers. So what is like an allegedly trade concern for Washington? Actually, it's a consumer successful story in Brazil, and many Brazilians are proud of the Pix.
Let's dig into that even more with a focus on the digital euro. So to do that, we're joined by Sebastian Siepen. He's a key figure at the European Central Bank because the digital euro pilot program is his baby. I'm also joined by Dharmesh Mistry. He's been in the banking industry for 30 years and lived to tell the tale. He is also the co-host of the Demystified podcast from FinTech Futures. Thank you both for making time to be here today. Dharmesh, let's start with you. You heard us talking a little bit about the consequences that Brazil is now facing from the U.S. in the form of sanctions. What's your opinion? Why does Pix seem to annoy President Trump so much?
Well, I mean, it shouldn't do really. I mean, I guess what Pix is actually achieving is inclusion in Brazil by opening up the domestic payment rails so that everyone can transact in reals rather than, go to a different currency. So I'd imagine that's what it is, but who knows with Trump, right?
Yeah, I wouldn't ask you to necessarily read his mind, that's for sure. Sebastian, we are here today to talk about digital currency, the pilot project. You're overseeing this right now. How would a digital euro differ from Pix or other programs that our viewers might be familiar with?
So I think it's good to take a step back a bit, right? So in Europe today, we have multiple options to pay, right? You have something which is very core to the ECB. It's cash, right? People can pay with cash today. Then on the other hand, we have, of course, private payment solutions which provide digital payment solutions. Here, the digital euro would come in as a complement, so basically a digital form of cash that is provided here. And this is ultimately what would make it a bit different from private payment. Means it's ultimately the ability of consumers, of you and me. Ultimately, you live in Berlin, I believe, right? So you can hold digital euros, right? So you can hold this, and that is something which makes it very particular because it's similar to your cash by a digital form. That is something that's not out there today in that way, and hence here's the difference. And of course, from a pure policy perspective for us, it's critical that we have this balance, right? There should be a balance and a choice, an option for consumers to choose how to pay. So this is either choosing a private option that you have today here in Europe, or as well a public options. And on the public side, you just see that people are turning digital, right? Everyone is in a digital world. We have this meeting as well digitally, not on site, etc. All of this is facilitated these days, and per that also payments move digitally. And the digital euro is ultimately something that brings cash to the digital world.
Balance, that sounds very good to me. Options, that sounds very good to me, Sebastian. But Dharmesh, from a technical side of things, how does a digital currency differ from other payment platforms so that people might be familiar with, like Apple Pay or a Visa card on their phone or something like that?
So, look, in the old world, let's say, because it's easy to say that digital money is the same. Well, it's not, right? Because in the old world, where we have fiat currency, the challenge was about how do I send money from one bank to the next, and the central banks kind of play a role in that, and they say, well, look, you send the money to us, and we'll tell the other bank, so that every bank doesn't have to connect to each other, and that was the old rails, right? And that was before the internet, and so we had a lot of technology and telecoms networks, etc., that allowed us to communicate between the banks domestically. And then obviously we wanted to send money to banks internationally. And then we had to introduce more players into the loop, right? Here in the UK, we only have about half a dozen banks that are connected to the actual central bank. And so, for smaller banks, they have to connect to a settlement bank, which is connected to the central bank. And therein is a long chain, right? And that chain gets even longer on an international basis. So, that's partly the problem. That expensive old technology is slow, and I'd like to say it's error-free, but it's you can get some issues now and then, right? So one of the things that digital money solves is that it's almost point to point. It's issued by the central bank, and then it's used by individuals.
Yeah, Sebastian, weigh in on this. Is what Dharmesh is saying. Does that ring true to you?
So I think partially yes, but I think on some points I think I just would like to add a bit, because so certainly digital euro is ultimately yes, I hold digital currency, I hold it like cash, right? So it's my money, I own it, issued by a central bank. I think that's fully on point. However, of course, for the digital euro, the PSPs, and that's one of the reasons why we also run the pilot. So PSPs being payment service providers. So these are banks, these are those counterparts who today provide payment services as well to consumers and merchants. They continue to play the critical role because they are the one who we call intermediaries. So the intermediary between the central banks as well as then the consumer merchant who distribute or support the distribution of digital to consumers and merchants. So they have a key role, and it's a platform for them, I think, also to innovate and provide new products.
Sebastian, I want to talk about business here a little bit, because we've been talking a little bit about what this means for users, a normal person like any of the three of us, obviously. But in terms of what it means for businesses, on the one hand, I can imagine that might mean that banks can charge fewer fees for these kinds of payment transactions. But on the other hand, smaller businesses, like I'm thinking of the corner shops or Spadies in my neighborhood, like they might save some money by having fewer fees associated with those transactions. So when we think about how a digital euro would impact business in Europe, what can we keep in mind here?
So the legislation that is currently under discussion between the Commission, the Council, as well as the European Parliament, foresees a compensation model. A compensation model implies there will be a sort of fees that can be charged by the acquiring bank, so the bank that deals with the merchant and supports them in accepting digital euro at the point of sale, so be it in the shop itself or on the e-commerce platform, they can charge a fee. That fee, as it stands today, per what the legislative proposal is capped, so there's a maximum fee. So for that, there could be that certain businesses may pay less as they would be paying today. Others may pay the same. But it's also, of course, important that this is a cap, right? What can go even below. And for us, of course, the engagement with the merchants is very critical because the digital will be legal tender. So there is an obligation for the merchants to accept it. And for that, of course, their support of it, they are there that they have to accept it, but still this needs to be an environment for them where they enjoy it, accepting it, because it needs to be an option that should be available to consumers to pay at any time. And for that, it's important that it's something that fits the merchants, while of course then also preserving certain income for the banks, for the payment service providers to ensure they can cover their costs. However, if in case banks, payment service providers offer value-added service that go beyond the basic services provided to merchants and consumers, they can charge in addition to this because that is a value-added service that ultimately brings additional value to merchants and consumers.
Dharmesh, a big word we hear here in the EU, which I'm sure you're an observer of, being in the UK, is digital sovereignty. It sometimes can sound like a buzzword, but there is real meaning here. What would a digital currency mean for any country's sovereignty in this case?
Sovereignty is basically holding on to your own currency. So, I guess the threat that we're trying to mitigate with sovereignty is to make sure that we don't get dollar dominance.
So, Sebastian, something that I've had to get used to living in the EU is how long sometimes things can take to get off of the ground, right? We've been talking about the digital euro. It's been in the works for a while. It looks like we'll have it by the end of the decade. Of course, the pilot program is coming soon, but why not launch a system like PIX in the meantime? It's not a digital currency, as we've said here, but it's so simple to use that a lot of people confuse it with a digital currency. So why can't these things maybe move in a parallel track?
So on our side, I think our full focus is on digital euro. On our side, this is what as well the legislation is prepared for. Of course, we see that the private sector is developing their solutions. They continue to develop their solutions, both of European actors as well as non-European actors, of course, in that space. And of course, I think that it was touched on earlier. There is an angle of strategic autonomy to this full discussion as well, where we have a situation at the moment, of course, where in Europe we don't have one scheme, one payment solution that operates across all, let's say, the fragmented euro area and functions there. And hence, that's one of the key drivers for the digital euro.
Dharmesh, you and I had a bit of a chat earlier this week, and when we weren't chatting about the joys of British food, you were making some kind of like a bit of a sci-fi case for what a digital currency could mean, like how it could change people's lives in the future. Explain that to us, like where could this go in the future if things go perfectly and Sebastian and the team are able to get the digital euro off the ground?
I mean, I think what we're really talking about is the benefits of a pure digital currency, and what it will do away with is the expensive fees, the complications of having to hop between one bank to the next, money getting lost, and you working with the banks to try and recover it over a few days, etc. So, apart from it all just working much more smoothly, it will also allow us to change our business models and come up with new benefits for customers, things that we've kind of taken for granted that that's just the way that things have to be. So, for example, why do we get paid on a monthly basis? Well, because it's a neat, logical amount before we make a single payment to a person. If we had to make that payment by the hour, then it would be very expensive for the individual and for the banks to process, right? And be a lot for the bank to process on the compute power that we used to have, right? However, on the digital rails, it's possible to stream this money as you earn it, right? Now, whether somebody wants it, whether somebody will facilitate it, that's a different case. But certainly it would eradicate things like, one of my pet hates, which is the payday loans, extortionate rates of interest just because somebody has got bills and payments to make before they get their salary, for which they probably earned the money already, right? But they had to wait until the end of the month, right? So streaming money would get rid of things like that. The other thing is that if I think about, how I consume stuff, well, I've got, bookshelves full of books where I would say at least 70% I haven't read all of them, right? Like the full book. And what I'd rather do is pay per page, right? So for every page that I read, I pay a certain fee. And maybe if I read a whole book, I paid now more than if I had bought the book outright. But because I know myself, and that goes same for, TV programs and music too, that, I don't always listen to the whole thing. I'd rather just pay for what I use. And again, streaming money through an efficient digital mechanism will allow for things like that to happen. There are many more examples that we can come across, but these are just some of the basics.
Sebastian, before you found your way to heading this pilot program at the ECB, you were at Deutsche Bank for a number of years. I'm wondering, I'm not asking you to speak out of school or read anybody's minds here, but do you think that the private institutions are annoyed about the possibility of a digital euro, or is there excitement among the private banking institutions that you used to work with?
So I think all actors have their interest, right? It's always like this: the bank is there. They have shareholders there to earn money, right? And that's fine. And, that's in line with their interests, etc. And this always comes then into debates, which go then into new developments, which to some extent are coming in via legislation and become a regulation, right? And however, if you look at it, right, if you look at the 36 payment service providers, including banks that were selected for the pilot. You have Deutsche Bank, for example, in there. You have many other players in there across Europe, across, I think, every major country in Europe. You have a great diversity. You have, let's say, the traditional bank. You have the fintech, techie company that may come across more innovative and more digital. However, they are all part of it, right? Because it's something that is coming. It's something you need to prepare for, and that is what the pilot is about. Prepare the market for possible issuance towards 29, and in that context, check whether what we have designed, right? We have, of course, spent a lot of time together with the market. We have a rulebook development group. We have the European Retail Payments Board, where we get constantly feedback on certain design decisions on a technical side that are in our remit. However, there is an output now, and we need to test it. We need to see how it works. And this is where this pilot gets super important to, on the one hand, see whether consumers, Eurosystem employees, merchants, so merchants that have a contract with the ECB or National Central Bank, and these selected people that deploy it, if this does it work? Does it make sense? Is the user experience a good one? Is it easily deployed? Is the implementation something that functions? And what do we need to adjust before we roll this out towards about thousands of PSPs? Of course, always dependent on having a legislation in place, which is where the dialogue at the moment is ongoing, and we really welcome the developments there in Brussels on our side with the trialogues that have started now this month, and they continue over and after the summer. So that I think is a bit the scope of this discussion. Yes, of course, every actor has their opinion. However, ultimately, you look now at the facts. What do we see? We have a great selection of banks and payment service providers that support the pilot beyond what we actually planned for if you look at other documentation we had. So with that, we're very happy and look forward in testing and piloting across stakeholders.
Gentlemen, you've both been so generous with your time. One last rapid-fire-esque question for you both. Sebastian, I'll start with you. What's the future of the digital euro going to look like? And Dharmesh, digital currencies in general or digital euro when we get to you? But Sebastian, what's the next future going to look like for users here in Europe?
So let me look at the next immediate steps. Firstly, regulation needs to be finalized. That's the base for it, as just said, right? That's happening, maybe finalized by the end of the year. We continue our technical development alongside of this, and this ultimately prepares for an issuance towards 29. And this is then actually where the broader consumer, where you can get access to it, you get it from your bank and can use it and deploy it for the multiple use case it has. So the P2P, so the payment, the person-to-person payment, the person-to-business payment, which can be done either in the shop, at the Späti you mentioned earlier on, if they accept it, and then as well online in your e-commerce shop, where you may be shopping these days more often. So that is a bit what the consumer can expect, and we prepare for this now with the pilot while legislation progresses in Brussels.
Dharmesh, crystal ball, what are you seeing?
I'm seeing a very exciting time, really, because I think for the last 50 years or so, we've seen a period of consolidation in banking, a reducing number of banks, credit unions, building societies. The number has just consolidated. Branch banking is, slowly dying a death, right? And in amongst it all, we've seen very little innovation from the banks. And if I were to be, very honest, I think actually, most of us are underserved by the banks. What I'm really excited about is that there are a number of digital options. There's the CBDC, there are stable coins, there are tokenized deposits, there are native deposit tokens. All of these have different benefits for different use cases. Also, I didn't mention there are wholesale CBDCs that will benefit the banks interacting with each other, right? So everyone's going to benefit, right? And the main beneficiary should be us, the consumer, driven by innovations in the way that payments can occur to make our lives easier and better, right? So, I'm all for digitization of money. It's long overdue. It should have happened at the beginning of the internet, right? We transferred content. Why not money? 30 years later is too late. I'm for it.
Well, I look forward to the day that the three of us can pay with a digital euro at the corner shop or the Späti here in Berlin. But thank you so much, Sebastian Siepen and Dharmesh Mistry, for joining us here on The Dip.
Thank you.
Thank you.
And that is it this week on The Dip. If you like what you've heard, you can find our playlist on YouTube or our podcast wherever you normally listen to podcasts. And if you want to leave a comment, which, by the way, we do love getting, you can do that wherever you're watching or listening to this podcast right now. But if you have a bit more to say, a proper rant, you want to tell us about how we didn't mention Vero or UPI or Venmo, you can do that by sending us an email at thedip@dw.com. But until next time, this has been The Dip. Bye.